Good morning, my friends, and welcome to another fun-filled trading day, Wednesday, January 31st, the last official day of January, of 2024, I might add, and merely a less than a week away from seeing our mentor, Michael J Huddleston, entering into the Robbins Cup. Everybody's excited about this. Everybody's stoked. It's a worldwide event, ladies and gentlemen. It's a worldwide event. And as it is, as I promised, let's look at the standings this morning. I'm just going to double check, make sure we're online here, because I'm sure my buddy Kirk is right in here. Right as we speak. He's probably like bright and early. And there he is. Yes. Good morning. NQ for the win, he says. NQ for the win. Good morning, Kirk. You'll love somebody who's that devoted. Hey, he's there right on. As soon as I click, let's get started. The man is in there. All right, as promised, the World Cup Trading Championships. Let's see what the standings are. Drum roll, please. Bling. All right. Sorry, that's the best sound effects I could do for you. We've got a guy, Mr. Lee from United States, 99%. No. I think Global Futures, the Global Cup Trading Championship Futures 2023. Oh, that's 23 to 24. Okay, so we want 24 right here. So, trades by Matt, 65%. Good for you, Matt. Y'all better get up in the triple digits soon. Kelly. Michael Wallace, 93.8%. We're just getting started, he says. Well, you'll get yourself 1,000%. You keep that up by the end of the year. Matt, you keep that consistent every month. You have 600%. Those are huge wins right there. Those are guaranteed wins. On any other year, those would be massive wins. But unfortunately, you're going up against ICT. So, and a good old Canadian, look at that, John Bannon. Yay, John, hang in there, buddy. You're looking at 600% by the end of the year if you can keep that up every month. That is a big time win every year, or most years, if you can get up to 600%, let me tell you. So, that's the standings. We're going to see a little ICT pop in here, and then it'll start to climb up. Or it will probably just pop in, and then just jump to one and stay there. And there'll be no looking back. Anyway, that's me. Pumping the MJ. All right. Now let's get back to our charts. Mr. T, I'm working on it just hard. I do. Got it. Okay, so let me just get in here, start this up. Commandments. Good morning. How are you? Hey B, good morning. Caught the Nasdaq short daily range from 10:30 and closed this morning. Done for the week. I knew that low wasn't formed basically. The fibs. Okay. All right. Let's get started here. So yesterday, let's just look at yesterday's little when I left yesterday, because I noticed oh, my wife's going into a sneezer again now. So here was yesterday. When I left you guys here, I was calling for 6-10-6 or 17-6-10, and I had a loss, or my stop loss would have been at 9. We got up to 8, I think it was. Yeah, the high of 8.5. So I was half a handle out where I would have gone. But remember I was telling you guys, make sure you take a piece off at the rejection block. You would have got the high, but you wouldn't have got that here. And then I was saying if it comes back into that area, I would trade. And it literally went wham, took me through and took me out at the same time on my entries. Then I got back in for some longs, then got out right in here on that. It was doing so much craziness, so it's like, I'm out. I had no idea where it's going now. So because it drove through that low, obviously the thought was that if they held that bold candles below there, that they were just going to return back to a spot and continue down. And boy, did they ever. Okay, so these are a couple of other little entries I was looking at taking, but didn't. Let's get rid of that. Get rid of all my little marks all over the place here, and let's. All right. So now we've broken down. Let's look at the daily here. Let's get a good look at the daily, because now we're dug into this daily fair value gap. Now we're digging into that. So we've come all the way back up to that level. We've come all the way back up to the base of this candle. We're inside the order block, I guess, breaker now that we've run this low. We've come back to it. There's an imbalance in there that's filled. So we're digging deep into this daily fair value gap now. So the next objective is, if we split this up, let's have a look at this. is, we're at 25, so look for 50. It's a big range now, so it's literally a 300 handle range. That's 4. That's a 300 handle range. So if we have another big range day like that, we're looking to get back to this old high here. And this breaker. We're on these lows. I want to see the, I don't want to see that 50% get taken. We can come down to it, as long as we don't close below it. So kind of a hard call right now, because we could either continue driving down, or this could be a wick below these lows, a dig down into 25%, we've pulled back. Yeah, I've got nothing solid in here right now. Let's take this one and this one. 50% of that 4 hour is right here. Oops, what did I do there? Let me put that back. Let me lock that in there, so I don't do that again. Kirktown. I called 17608. Yeah, I'm learning. Nice. Good for you, man. So I like to hear. Hey D, when should we expect to see you in the Robbins Cup? Next year. Next year. I'd love to enter into it with Michael, just to say I was in it the same year he was. But I'm still working on the old confidence. Believe it or not, I'm still battling some demons. And I'm going to share those with you guys all the time. This is all like a video diary for me. Have a great day, love. That was my wife, by the way. I'm not saying that to you guys, but I love you guys. Have a great day anyway. Yeah, I'm going to share that with you guys in terms of the psychology of what I'm thinking at the time. Right or wrong, that may be good or bad. They may lose people over it, but, or as long as people aren't trolling, I'm going to be as honest as I can with you, let you know. If I make a mistake, what's going on inside my head, how confused I'm feeling, or foggy brained, or just revengeful, or whatever, I want to share that with you guys, just to let you know. We all have our processes, or we all have our little demons that we're fighting. It's easy to read the charts. I find it easier to read the charts now than still to trade. I still battle myself every time I put a trade on. That self-talk, that little music that you play inside your head that constantly repeats itself. You ever have one of those songs stuck in your head? Same kind of thing, right? So the fear is that I'm just going to keep making the same mistakes over again. So the whole purpose of me trying to battle those demons is I want to be a better trader, and I want you guys to be better traders. And if my story kind of helps you guys out too and makes you go, yeah, okay, I'm feeling the same way, then we work it out together. That's the whole part of partnerships, right? Shared experiences. So next year I will enter into the Robbins Cup post Michael. I would like to win. I don't say I would like to win. I'd like to place in the top 3. as Michael's student, once he's won it, I'd like to be able to get in there and create a name for the student side of Michael's stuff. So when they see him making it, I want to be able to go in there and say, here was our mentor. He blew it away last year. This year, I want to get in here, and I want to show you that you can make a living out of this. You can make a decent go at it with your skill set that you learned from Michael's principles. So I want to be able to do that, just to kind of round off the bag. Now, I am not the best student by any stretch, so I'm sure there'll be plenty of ICT people in there over the years. Once he's won it, he's going to stimulate other people to get in there, especially as students, to make a name for themselves. And you want to make a name for him too. I love the fact that he shared this stuff with us. So we can get in there, show the people. And really, it's not about showing off, peacocking, whatever. But for me, it's a sign of respect just to say, hey, Michael, not only did you win it 1 year, I did really well as well. I posted in the top 3, top 5, whatever is, when you see it on the charts. And I went from 0 to top 5 in the world in a trading competition. That would be my goal. And to win it, well, that's just like icing on the cake, right? Always, good morning. Ready for the roller coaster today? I think so. It looks, but we'll wait. We'll do the same thing we did yesterday. We'll look for our optimum entry. We'll get down to the minute by minute shenanigans and see what we can find. Southie YT, good morning. You deserve more view, man. Oh, thank you. You have any Discord channel? I do, but there's only I only have 2 guys on Discord. I very seldom get on there. That was for the guys who are building bots. We were talking about bots, and I was building I've got a silver bullet bot, but I can't put it in here because it's Pine script. It trades on an MT5. So if you guys are into bot building, DM me, go over to Telegram there, have a chat, and maybe I'll start up a thread on bots, and we can talk about building bots and stuff. Love to be the third. Yeah. It's not, for me, it's not important to win it. What's important is to show Michael that all the hard work he's put into it, he's taken a guy that didn't know what Forex stood for, didn't know any of that stuff. Like, I didn't know what cable and fiber were. I thought I had to get cable to get TV channels, and fiber. I thought, oh, he's talking about diet as well. I need to get more fiber in my diet. All right, I could do that. I can eat chickpeas and stuff. Like, that's how naive I was. I didn't even know what Forex stood for. So when he was talking cable and fiber, I'm like, I'm not going to ever learn this stuff. So it was a great start from 0. And now I'm here sharing a little bit of what I've learned, and hopefully it can make a difference for you guys as well. You sharpen what you see. And if you haven't already found out, I love looking at the 1 minute chart. For me, it's a reflection of any level you're on, any time frame you're on. It's a reflection of everything that happens fractally. 1 minute's moving along fast enough that you can go, okay, I'm expecting it to go here or here. I got a buddy that comes on here, Lauriston. He gets down into the 5-second chart. Man, that guy he can read a 5-second chart really well and does some great trading off of that. So I like the 1 minute, and I like to watch every candle, because I think if you get really good at reading the 1 minute candle and you read where it's going, where it's coming back to, and you get really solid at that, whatever level you choose to live on to trade, whether it's 15.5 or whatever, you'll understand it so much better. You'll just have more time to think about what you already know, because you've practiced on a 1 minute level, and it's fractal. Whether you're going into the 1 month, you go, I see exactly where that's going. It's going to take a whole year to get down there. My estimations, it's going to be about a year. If it's 12 candles away, so to speak, you can say, I know where that's going. It's tipped its hat here. Now I know I'm expecting it to start running back down into this discount range, which may take months to get there. So if I find an optimum entry and I want to do a mega trade, there you go. Because you've studied the 1 minute chart, and it will make it's exactly the same as all these levels up here. But anyway, that's how I like to do it. And then when the charts aren't moving, in the weekends I'll just scroll back multiple areas, and then I'll look at one candle, and then I'll just say, where do I think it's going to go from here? And I'll put these sticks out here. I'll put lines out here, and then I will practice. And I'll say it's going to go here. I put my lines down here, and I'll say, as soon as it gets to that point, okay, good, I made some money. And now I'm going to look for another point up in here for price to return to, or price imbalance. And then I click. Okay, it hit it again. Great. Now I'm going to look for blah, blah, blah. And that's how I'll practice it over and over again. I'm thinking, well, that's just 4-hour chart. Well, how many pips would have that been? Sorry, coming from my Forex days. How many handles would that have been? And how much money would I have made? Not that the money matters, but right now it's just looking at the ranges and all that kind of stuff that makes this practice ideal for me. And then you go into any asset class. Then you really challenge yourself. Just go into a stock and pick a stock and just scroll all the way back through the stock. I did it with a Tesla stock. Start off with $100,000, and by the end of it, I was like $175 million or something like that, because I just went through each one of them. The thing was, I knew what the price was already, and I started way back when it was a couple of bucks, whatever, when it first started out, and I started going through all the charts, practicing it that way. But the advantage I had is that I knew that the price was really going to end up higher, so I already had like a bias. That's the problem with it. Pick a stock you don't know and go back and practice it that way. You are reading this. Can you please give Darren a thumbs up? You all reading this, can you give Darren a thumbs up? Or way of saying thanks, Darren. Oh, AB, bless you, man. Thank you so much. Thank you. I'm honored by people who find value in that. Thank you. Like, I really do. So if you have a history of creating 500 plus MTB indicators for a Forex company, not me, but my team, love to join. Oh, cool. Yeah, there's a guy, and I don't mind promoting people who are really making a difference. I've got an indicator on there by this Asian fella. Man, oh man, he's got so many ICT things on his charts. Like, how many minutes we got? I see if I've got enough. If I can bring it up for you here. It's let's see if I remember where it is now. No, not in that one. That's my bot there called Pirates. Where is his indicator? I got it stuck on one of these. Stand by. It's probably easier for me to just go to the market here and point it out to you. The library, right here. Smart indicators, update. There. That's the one I've got. So let's go back to the product. Look what this guy's got in here. Well, let me just show you. I'll show you the actual indicator. It's like nuts. Let's go back in here. Look at this. Look at the inputs on this thing. This guy has got incredible. Look at this. This is just getting started. So you got internal structure. You got bullish and bearish structures, candles. You got the breaking on the upside and closing on the downside. So you got like swing points. Swing structures he's got in here. He's got this fractal points. He's got the Z patterns, order blocks, different types of order blocks, the style, colors. You can add colors to whatever you want, the bull candle, bear candle, volume, if you want to get into volume stuff. Higher time frame. You can add a higher time frame thing here. He's got a little click chart. You can click on any time frame here and it'll pop overlay itself over the top of your chart. Higher time frame swing points, internal swings, fair value gaps higher. It's got bullish and bearish structure for higher time frame styles, higher time frame, more colors and things you want to add to it. You can show a dashboard on the middle time frame. Is that what that is? I don't use that one anyway. Fibonacci tool. It'll pull a fib tool all the time. You'll see it actually drop a fib tool here all the time and lay out all the fair value gaps. It leaves them all, and you can actually turn, once the fair value gap's filled, it'll turn off, or you can leave them on. There's multiple different fib levels. You can set your own. Breakers, supply and demand. I'm not into supply and demand zones, order blocks. Strong imbalance. He has a label on there. It says this is an imbalance. This is strong buy or strong sell, if you want to trust with his stuff there. Fair value gaps. He's got all the fair value gaps, different colors. Liquidity voids. He's got all those. Volume imbalances. He's got those in there. Long wicks. And look, we're only halfway through all the stuff he's got in this thing. Equal highs, equal lows. Premium discount zones. Previous day, week, month highs and lows. So if you want your new week opening gaps, all that kind of stuff, all in there. Previous days open and closes. So you have your midnight candles. That's all in there. Market time frames. You got all the time frames that will sit up in the corner here and run if you want. If you don't want to know what time it is in Tokyo, it'll all be up here if you want it. Anyway, so there's a whole, and then you can set a shit ton of alerts. A ton of alerts. Like you can have them on your phone, you can have them as a message, email. Like the kids thought of everything. Like it's amazing. Anyway, so let me drop it on here so you get a bit of a look. So I'll load up my indicator 2 set. Okay, so you get an idea of what it looks like when it's up and running. Go to the end. That's the fib tool it pulls, and then it sets all these. You see how messy it can make your chart though? But I like this because it tells you exactly how many seconds are left in that 1 minute chart that you're in while you're looking. Fib tool, look at that, pulled right back to 62% of that range. So anyway, you get the idea. So I'm all for, promote people who are doing a bang up job. Good morning, Takmilla. How are you? I have thumbs up twice already. Kirk, I love you guy. I love that guy. Need more YouTube accounts. You break me. I love it. All right. Let's get back to 4 hour. Now we're just, let's get down into 1 minute here and start playing. What's our bias today, you guys? What's your overall bias, down or up? Now we're inside this. What's your overall? Let's find out what the overall consensus. What's your overall consensus, you guys, for down or up? Are we looking for higher time frame run back into this imbalance up here? There's a little tiny imbalance up there. Are we coming back to that order block one more time? Because right now we're in the middle. So whoever guesses right, it's got to be a guess. Like for me, there's no solid up or down here, even though we're sitting in a fair value gap. The indication is that we probably are going to come back down into this mean threshold here, come back to the top of the fair value gap, see if there's any support in there, and we roll over and come back down. So the area that I'm looking for support right now is, are we going to get back on top of this daily fair value gap and start to climb back up again, or are we going to hit the bottom of it and start to climb back or descend? What's your overall consensus? What do you guys see? Let's get down into, let's try a 1 hour chart, see what's going on here. Morning, Algo Cats. Always. So would you look at the gap on the daily as an exhaustion gap or a vacuum block? Oh yeah, Michael has used that expression. I'm going to be honest with you. I wouldn't know exhaustion. I know he's used those terms before. I've heard him, and the vacuum blocks, but he hasn't used them so much that I've become really familiar with them. I couldn't give you an absolute definition. We'd have to resort to the AI and find out Michael's definition of those, just so we keep it germane and I'm not guessing. So I would recommend you guys use that tool that I pointed up on one of my episodes for determining Michael's, how would Michael define this? And let me go over to my tools here. And look for ICT. And we're going to look for exhaustion gap. So the AI is looking up an exhaustion gap. Here we go. It is typically a graphic depiction of capitalization or capitulation, which represents the last bit of momentum in the underlying trend or direction. It can occur in an upward market or a downward market when there is an expectation of a bullish news or reaching for liquidity above the current trading level. When a gap up occurs, it creates a vacuum of liquidity between the previous candle's close and the next candle's opening. As no trades are made in that space. Okay. I'm a bit late, sorry, down. I was at uni. How are you, fam? Everything's good. Thanks, I'll go. I breached the ACC yesterday like an idiot on a close. I was trying to catch the same position we catch when you end the stream. I want to see if it closes the vacuum block. I'm bullish on the week. I was really mentally down yesterday night. Slept 2 hours and then I was going to uni, for an example. Pass, so good thing at least today. I burned 5 accounts already and in a do or die stage now. Drop your leverage, man. Drop your leverage. Get right down into, till you get yourself back on track again, drop it down to one of your minimum entries till you start to feel that confidence. Otherwise you're driven by fear, and you never want to do this stuff when you're driven by fear. I need to economy a bit for the new one. I blew about around $2,000 in a year, but I learned a lot. I have blown tens of thousands of dollars doing this stuff, like real money. I went through Michael's stuff back in 2016. I was part of the original 800 that started, and by the end of month 1, I was so excited about the stuff he was showing us. I went live right away, and I literally kept loading live money in, and so I literally paid for my education, like going to med school. It cost me a lot of money. Instead of playing demo, I just kept loading live money in it. And then from there, you develop all the fears and the anxiety of losing money. And that starts to etch itself into your psychology. And you end up trading out of fear instead of out of logic. And that's been the bane of my existence for the last 6 years. Starting to figure out this stuff is one thing, but getting past yourself, that's another one. And if you make the mistakes early, they will live. They will be like parasites that live inside your head. You've really got to practice the demo. So if you all your focus is on losing money, in NLP we teach whatever you focus on the most is what you get. So wherever thoughts go, energy follows. Where energy follows, where thoughts go, energy follows. So if you think on one thing, all your energy goes towards that. So if you think about losing your account, that's what you get more of. Think positive things, keep yourself upbeat, focus on the task, stay in the demo accounts until you get your jig on again, man. Like, don't go keep running into a live accounts. You'll keep running over yourself. Nothing worse than backing up over yourself over and over again. I'm still leaving the process of people. I'm missing the learning people like him are mentors to me. Yes, he is. Also, the latest best session I got yesterday. Drop a lot size, drop the leverage, risk little. Any prop firms that you like for Forex, not futures, or you play live. No, I'm in a prop firm right now. It's Fivers. I like Fivers because they haven't, they don't charge you a monthly fee. So they just give you a chance. You have 2 levels that you have to pass. When you pass those 2 levels, then you get your funded account. And there's different levels. You can get a 5,000, 60,000, 100,000, whatever account. And as long as you pass the challenges, you get funded account. Then they keep moving you up. Every time you get another 10% increase in your account, they bump it up and you get to keep 80% of what you make to start off with. And you start getting up to $300,000 accounts, they give you a contract. You get 100% of what you make plus $10,000 or something. So they pay you every month to make 100% of the money that you make is given to you. So having a prop firm at that point means you make more money than you would if you had your own live account, because you get 100% of the profits plus they pay you $10,000 salary every month. How's that for crazy? I should put a link up in my bio there. So far I haven't had any problems with them. They've been quite nice. All right, so we're seeing the overall consensus is down. Is that it? You burned a $5,000 account in Fiverr last week. Believe me, I've burned Fiverr accounts. I had a bunch of them. The good thing about this being live with you guys is it forces me to really focus on each individual candle and not just go rushing in, because clearly I wouldn't have 100 people in here if I kept doing what I was doing before. And I was doing a lot of experimenting. And you'll see, like yesterday I came in, I started off, opened it up, and I think it was Always, or maybe one of the other guys said, seriously, you want to take that trade? I'm thinking, no, I'm just playing right now, trying to experiment with some ideas, and it went against me, came back, and it just got out near break even. But you'll see me take a trade. Doesn't mean to say you guys should take anything that I take. I'll tell you that right now. Don't take anything that I take, or if you do, it's not by any advice for me to take it. I'm just going to say it. We're playing this like a video game. No financial advice. I'm a paramedic firefighter. I'll tell you that right now. I am not a financial advisor. Nothing of what I say here should be construed as financial advice. And please read in the bio description above, or in the description below, that entering these markets, you do it at your own risk. How's that? Okay, so what do we have here? We have a run. Got relative equal highs up here still. Where do we put the carrot? Where do we put the carrot? I do like these areas down here. So looking at this area right here, this order block, this 3-minute or 3-hour order block down here, we'll see if that holds price. But look for a fill or a run down into this, the rest of this fair value gap here for sure. Now we're eating into the rejection block here. Let's get down into the 1-minute charts now, because we're like 15 minutes away from our entry. So if we're gonna go, the consensus is short. Some people say go long for the week. We'll see what the news release. There's a news release at wasn't it at 9:45? That was the Chicago Mercantile PMI. That's the last news event of the day. until 2 o'clock. That's when the Fed funds FOMC statements are given, an FOMC press release at 2:30. So are we going to be marching time, short range stuff today? Sniping stuff. So let's try doing a little bit of sniping if we can. And as usual, mark up your, clear out your templates or your pages every day and start from scratch. Don't have too much hanging over, otherwise you'll end up getting a confusing mess here. Okay. %70 retracement. There's a nice good PD array sitting up there, and it's 69 or 79% retracement all the way up back up to the breaker, way up here. And this is starting to spool now. We have our macro beginning now. Put the link. I'll see if I can find got a link here. I think this is the link for you guys. That's an affiliate link, by the way. All right. Lee, good morning, Lee. How are you? Okay, so we're not quite at 50% of that range. So you want to see this kind of come back into, we got a little inversion there. Let's just wait and see what happens here near 10 o'clock. Now, if you're going to take out a high at 10 or a low, then reverse direction, I'd like to see this low get taken, then start running up for these equal highs up here. We'll see which direction they're going to head for. If they take these highs first, leave that intact, start to drive back down, then so we'll wait for the wick of the hour to start, and then look for lows or highs. My guess is they're going to take these lows out first, and then we'll see what it's like up there. So here we're breaking the 50% now. Look for these higher PD arrays for potential run back down. I don't know, as soon as my eye sees it, I have to draw it out. Puts us right on that other PD array up here for that leg to finish up. So we'll see if that works, if that's a price leg up. So we've got premium arrays here. At 70% optimal trade entry. And we also have another little guy right there, right at that breaker. Now we've broken the 50%, so we dug into the premium level, so I'm okay with that running all the way back down here now in the next 4 minutes and cleaning this lot out. So we'll see what happens here. It's not so abusive to your eye. Okay. So far, Mr. T, my buddy Mr. T is back. Caught himself a nice long trade. He's out for the week. Did a nice trade today. Good for you, Mr. T. I like it when people have got the discipline to say, look, I made my weekly haul. I don't care if it's Monday. I've made my weekly haul. I'm moving to the sidelines and playing in demo, or you know, I'm gonna keep practicing, but I've made my weekly haul. I'm done. And that takes a lot of discipline to say, I don't want greed to take over and just keep running. I can keep doing it. I can keep doing it. If you have a fixed idea and you say, I'm going to stick to this, man, kudos to you. Because I'm all about that mental discipline now. Trying to work on mental discipline. If I say I'm not going to do it, then I have to stop. I can't just say, I have that little devil on the shoulder going, go on, just go in one more. Just put it in there, lad. Go on in. Load it up, love. Load it up. Go on, drop it, a big one in there. Who cares about a stop loss? Go on. Go on, my boy. So, no. You have to kind of go, bink, and just flick that guy off your shoulder. Look at think about the other one on your other shoulder, like a Prince Charles or something. That's a smashing bit of luck you've had today, sir. You should move to the sidelines. So we've had this range here, come back down into a discount. See that one run all the way back up, or between these two here. You come down, you tag that guy, you come back up into this 2 candle. I guess that would be a breaker. There's a swing point here, but not a strong breaker as far as I'm concerned. But anyway, we're back up into this candle here. This tiny little fair imbalance right here, SIBI. So if we pop up in here, look for this guy to provide a level of support, and we're looking for this 10 o'clock to get taken out. We'll watch to see how this next 10 minutes unfolds. Now, because we're in this consolidation, we're starting to consolidate here. I'm not a big fan of picking any silver bullet. Any first gap you see, a run for it. Like that might be one there to go down to here. I like something that gives me a clean look. We've broken a low, and you see something form around that 10-minute mark. Jump in on the 12 or 16 to 18, and then start saying, now I've got an upside objective. Those look too clean up there. So that's what I'm kind of looking for. Even if we take this low out here at 9:30, leave that intact down to that order block, I'll be all right with that. Again, wait till we see something clean. Off grid, buddy. Interest rate. No, yesterday. Oh, that was yesterday. You got your win. Okay, good for you. Sorry. There's some kind of boot camp stuff. Yeah, I'm in the boot camp. Oh no, I'm in the high stakes trade. Take a $5,000 account. It costs you $50 or something like that, and you pass the trading challenge twice. The first one you have to get $400 in it, and the second one you have to get $200 in it. And if you get, they keep giving you a new account until you get the full funded account. Then you're off to the races, and they just keep bumping you up. 7,500, then 10,000, then like I think it's like $1,500 at a time. And then it starts to jump up by a couple of grand every time you hit 10%, and then you get credited the amount. If you pass the funded account the second time, you get a credit of what you originally paid for your trade. So basically, the account is free after you pass the second challenge, so you get your money back. And they put it in credit for you. You can either use it or take it home with you. Yeah, you can trade FX pairs, you can trade futures. You just can't trade oil with it. Yeah, that's what I did. $5,000 high stakes. And you get, now they've extended it. If you don't trade, you used to have it that if you didn't trade for 14 days, your account would be deleted. You have to trade at least 14 days. Now they're up to 21. So you have 21 days to make a trade. So there's no heavy rush or pressure in there. Yeah, drawdown's $500. No more than $200 a day, though. Just remember, you don't want to. That's why you put your. Excuse me. That's why you put your leverage at 1, like 0.1, and work up slowly. There's no rush. When you've got a $500 drawdown and no more than $200 in a day, then you start off, get your pattern set up, there's no rush to send it to 50,000. If you're good at what you do, a $5,000 account will grow as fast as well as a $10,000 account. It's just, you don't have as much leverage. So take your time with it. And if you blow an account, you blow $50. You start all over again. And if you can get past level 2 every time and you keep blowing it, well, then you're doing it for free, because it just keep giving you your money back. You try it again. What's your opinion on pre-market runs that indices are making as seen in January? Usually if you see a pre-market run, it'll run on the markets before it opens. Usually if you see that happen, it goes in the opposite direction. They're just clearing out liquidity so they can take it higher. I do like watching it before 10 o'clock. If it runs a low out before 10, it's not usually a good sign that it's going to keep going lower. Not usually a good sign that it's going to go lower. It usually is clearing out liquidity so it can start really driving that price back up again. What is the lot size for it? 0.1. Just start off with 0.1. You can go any lot size you want, but if I'm trading foreign currency, or if I'm trading foreign currencies, you'll have to trade a lot more to get anything out of it, because if you go 0.1, it's 10 cents, or it's $1 a pip, so that could be quite a long ways just to get 1 pip. You'll see, just to experiment with it. But I usually start off at like 0.3 for S&P and NASDAQ. Just line it up so you risk no more than 1 or 2% per trade, no more than 1 to get started. Yep, daily drawdown is something we need to focus on from my experience. Yeah. Lambo! Hello, D. Good morning. What product are you speaking about? Broker fund. Yeah, it's, if you just scroll up on the side chat there, you'll see it's a Fivers account. There's a link there. Waiting for price drop and see the actions on the 1 minute for value. Yeah, we'll place an order there. No orders yet. I'm not putting any orders in. This is just too crappy for me right now. And don't forget that it's non-farm payroll. If we've made our weekly money already, well, I've made my weekly money. Michael says, just grow your account 6% per month. You're doing fine. I started this account back in November, and I'm at 119. So I'm growing just over, it's about 6% per month. No major rush. Just doing it slowly. I make mistakes, but then pull them back. But if it's slowly growing over time, you guys are going to stick with me over the year, and we'll see if we can turn this into a $200,000 account. And if it happens faster, sooner, and make more money, then great. But again, it's a demo account. We're just practicing this stuff. What you do on your sideline stuff is entirely up to you. But this, we may not even do any more trading this week. Unless we see something clear. We're non-farm payroll, so you don't want to be messing in non-farm payroll. NFP, not for professionals. Not for people. Not for players. Not for impassioned people. Not for party people. Whatever you want to call it. NFP, man. No farting, please, because it stinks when you're in it. I don't know. I'm just trying to think of what does NFP stand for, really? What does it really mean? Okay, so we're going back into that typical crap we see in the morning. See all this noise? It seems we see that, and if that happens, then as we did yesterday, we wait and wait and wait till we see it trying to smooth out a bit, and then we can start to get in and see those optimum entry points. So I want to see something happen here in the next 8 to 10 minutes. Cody, there's my boy. He's back. My man. Good morning, good morning. Fed interest rate at 2000 hours. No trading. Yeah, at 2 o'clock. That's why we might see a lot of this just choppy chop stuff sideways. And then if we get into tomorrow, we're not doing any trading anyway. So you see there's a little fair value gap starting to form here. You see it's inside that consolidation. That could be the run of the day, and I don't care if it is. I'm not taking it. So that could be the wick, relatively flat. Michael's just, if you guys are watching your Telegram account, he's just having a grand old time on there right now. So here we go. Here's the 12. Now you come back into that short right here, running for these lows. See that time? 9, 10. We're looking at that after 10 minutes. There's the macro supposed to be finished now. Now I look for these things. For trading up in a discount premium. I want that guy right there. You get short there, stop loss above here. And don't forget that's all relatively smooth. So again, you're gambling, but that would be my typical entry. If this was nice and clean and I saw that kind of entry, if we'd already taken that low out and that started forming in here, I'd be all over that running for these highs here. So very important you make note in your books on the sidelines. Make notes. Trust me, this is a super important time. I've done a lot of research in here and I've spent a lot of time looking at this area, and it's critical that you look at that time again in the context of where time and price is to get in. Sometimes those bangers right off of the 10 o'clock are the time to get in on a silver bullet entry run up. If it's not a good banger, it's not at the right time, wait. And if this isn't here, your other time you want to look at is 16, 17, 18. So now we may see 16, 17, 18 run back into here. We do not want to see the lows get taken out before that, though. So there's another rule, because that's our objective, right? So if the objective is hit before we even get in, you gotta wait, because now they may just turn around and drive this all the way back up the other way on a 16-17 fair value gap. Now they've taken that low. That's the problem with consolidations. Have a lot of work on Android app bugs things. Because of that, I was not here. Okay. Think it's going to bounce. Retail will believe it's the bottom, and FOMC will take these lower and then head higher. Yeah, I like that idea. See, now this is nice. This is nice because now we're cleaning out these lows here. If we clean out these lows and then, which we just did, nope, not yet. What's the low there? 34, 33, 334, 333. So that is one handle below that. So it's taken out the lows. All right, so now I kind of I'm looking at these and I'm kind of ignoring them now. I'm looking for the next one, which is the 16, 17, 18 fair value gap to form. And then I'm looking for up there. So we've got what we asked for. We wanted it to take the lows out here and then run up there. So far it's working as expected. Build your narrative, wait for it to support it. If it changes, and also build in your narrative where things can go wrong or where you think it can change. That'll also help you read each candle and read each idea for your narrative to be supported. Because so when you get up into these higher time frames, you really have to hold that narrative for longer periods of time, which the psychology of it is where your brain starts to second guess your choices. Down here, you almost don't have enough time to second guess your choices. But up here, you certainly do. So the more you practice down in these lower time frames, the more precise you'll be. So this is what I'm looking for. I kind of ignore these now because we've taken out the lows. Now I'm looking for the 16, 17, 18 to form a fair value gap. On the opposite side. So now you say to yourself, which side do you take? Well, I've got rules that will say take the first one at the 10 o'clock or the second one or the third wick entry. So we don't have one here yet. And if nothing's formed by 21, I wait for the top or the bottom of the hour and see what I can find. Time. I'm very much driven on time now. I'll get rid of this here. So if you're going to continue, look at your overall trend is down right now. If you're going to continue down, your higher time frame pre array is there, your breaker's here, breaker inside a fair value gap, you could roll over and go back down. Keep that in mind. So those of you who said it was going to continue going down, look for a return up into a premium level in here. So you've got this fair value gap here and this one here right inside a breaker. That is usually a load up the bus trade all the way back down, and then look for a new price leg to push further down. So we're not getting that 16, 17, 18 candle, so I'm feeling more bearish now. So this may be the silver bullet. See how you can start arguing both sides, and if you can, you stay out. because now I have overlapping narratives that are kind of bouncing around inside my head. What do you guys see? Tell me what you guys see. Check 5-minute chart, 16, 17, 18. What is that? That's the minutes. That's minutes. Look at the bottom here. When you see my line down here, see it's 10, 17, so 16, 17, 18 minutes. I'm very much about minutes. I've done a lot of research on time, and it's really critical. Michael's not kidding when he says time is important. Time, time, time. 5-minute chart, sorry. You were saying 5 minutes. Yeah, that actually did go 1 pip below. So it's equal lows here, right? Equal lows, equal highs. Kind of keep in mind now, you think to yourself, what are like PD arrays? What are PD arrays that are the same in the discount area as they are in the premium area? So like arrays. See how they've all been worked in here? Everything's been worked. This is the only little pocket left for rollover. Either take these lows, take it lower, or we use this here as the run. But we got to break this high. We got to start breaking market structure to the upside to support an upward run for me. Right now we're still breaking structure on the downside, albeit a wick right now. We are still breaking it here. If we start to run to here, roll over and come back down, again, you're still supporting a downward run, which right now that narrative holds true for me. So we have more downside run than we do upside. And remember when Michael says when the candle closes below the, I think it's rejection block, or the low. I think it says when it closes below the low, that's more indication that we're going to go lower. And we haven't right now. So we've definitely closed below 50% of that wick. So again, I've got more thoughts about this going lower. Best thing about this is that in non-farm payroll week, if you're making some cash out early in the week and you can sit on the sidelines in this indecisiveness and you're not pressured to try and squeeze some money out of the markets, the closer you get to non-farm payroll, because you've either taken a loss, you haven't thought right, you beat yourself up for something, some trade you took, and you're going into the end of the week either at a loss or you haven't made anything yet, you got to kind of find a way to ditch that thinking, because that will hang you up big time. It'll hang you up big time. See, my instinct as soon as I see something like that is just to draw it in and have a look, see where it's going to go. If that's a price leg, we'll do it this way. I see the leg that takes the low, waiting for more structure. But I'm still long. I'm long as well. I will go long if fair value gap formed, and vice versa. If price respect and a civvy bearish bias, then yo, I hope you receive the affiliate thing. I get a 5K account and I will stick to a 0.1 lot size. with a low risk. I will be here daily and learn. Morning. Lori, my buddy, my firefighter buddy, my brother in hoses. Most people say my brother in arms, but he's my brother in hoses. AB 280 on daily. Down to just to go up. Also, there's a 15-minute fair value gap with an order block. Yeah, there's equal lows. I don't think they want to leave those lows untouched yet. So we're over here. $233. $221. $254. See, we haven't got our silver bullet entry, so she's a wait and see. There are going to be plenty of days where silver bullet set up so nicely, trying to wrestle something out of this crap. You're gambling. You really are. You know, wait for a really nice setup. And if it means we're going, I remember when Michael, back in 2017, the markets were not in sync for him. And he went weeks, sometimes months before he, like, I remember when we first started out, he had traded 3 times by the time he got around to January or February, something like that. 3 times. And I was over, and I kid you not, I'm not lying here, over 3,000 trades I'd taken in the time Michael had taken 3. That's how nuts I was. I was a clicking bunny, man. I was just like, as a clicking fool. I clicked on, I saw that candle going, oh, it's going up. I'm going in now. Click. Oh, it's going down. I'm gonna go down and change that. Oh, it's going back up again. Crap. And I was literally a greyhound chasing a rabbit. Every time that thing popped, twitched above an old candle, I was in long, short. I had no freaking clue what I was doing. No clue whatsoever. And that was live money, folks. And I was dropping 2 handles at a time. Like sometimes I'd go, oh, I'm in. And I'd put 2 handles on there. So that would be like $20 a pip. And you go, oh man. And you going up, and you just see hundreds of dollars in a few seconds, and then all of a sudden you go, wham, your account's gone. You go, crap. And then you got to sit there and go through the whole rigmarole of loading into another account again. It was absolutely a feeding frenzy for the broker. He was just loving it. It's like, this guy's nuts. Here we go. We're still going down. You're out of the long already? Yeah. Yeah, we've got nothing that's really supported a long here. If anything, we're finding support off of these. We have a little swing point here. We have a breaker. So we come back up into this breaker right here, and we're finding some support off of that. And we're overall trending down right now. So you can't wrestle the long until you see a narrative that supports the long, which is great. You know, have a narrative that's long, but you got to also have the time when you say, I've got to write it off. So if you're writing it off now because it's broken this low, excellent. Now start forming a narrative that supports a short. And if it changes on you, see, build in when does that short change for you to the upside. Because if you were in a trade here and it went against you, that's the rule. You have to build into your trade in order to close it, and close it with confidence and say, I'm out. My narrative is gone. I'm not sure now. I'm out. The problem is when you take your stop loss and you keep moving it thinking maybe. Nope. It's already blown through your theory. So get out. Get the hell out. So here's the next price leg down anyway. So I'm looking for that little price leg there. What does it line up with over on the other side? No idea. No idea right now. Because I'm not trying to build a trade in here right now, so I'm just kind of watching, see what it does. And like you guys, I'm looking for an opportunity to just grab some pools of liquidity all the way up here. Like, look at this candy land up here. There's a whole bunch of cheddar up there, boy, let me tell you. So now we're looking for an idea. Time and price again. Here's the turn. Bottom of the hour. Remember, we could get the crazy Ivan. And then the turnaround and continue back down again. So in order for this to really support a break in structure to the upside, I want to see this go and this go to the upside, and then think, okay, now we could be breaking structure and changing directions. And I want to see the typical bull candle above, fair value gap above, trade back into it, and away we go. The fees alone crushed your account. Probably crushed your account. Oh, I was, mind you, it wasn't a lot, but sometimes you get $6 a trade. And then I started getting into swaps. And I'd be like, you know, if you're going to trade euro on a short and hold it overnight, you get paid at almost, and on a Wednesday, they used to pay triple. So they charge you triple on a Wednesday. And it was, if you're in a short account, so you got paid to hold your trade over 24 hours. So if you're in it for days and days and days, you're just getting paid. You get the cost of your commission paid for, and you're in the trade for free, provided you're on the right side. And invariably, I was on the wrong side. So there you go. There, now we've, that leg, for me, that leg is done. That leg we called over here. So now I remove this. And we still wait. So here's your 32. Nice drive. So we're looking at, what was it? 254 down here. 254, I think it was. 252. Where did I go? Oh, it was a 15-minute chart. Looky. Reprice, rebalance. So there's a fair value gap there. Even though there's a wick, there's a fair value gap there. Below us, there's one right here. Let me just pull that out as a 15-minute one so we can. Oh, look what that lines up on top of. Looky where we're asking for it to come to. We talked about this earlier today. Actually, no, I'll build it out there. Remember at the beginning of the session we were talking about where we thought it would come back to, where I'd like to see it come back to on the daily chart was the mean threshold. That is the mean threshold right there. And that's also the mean threshold of that 15-minute fair value gap overlapping confluence. I think not. I think, is there something suspicious about this level? I'm probably frustrating all you people going, for God's sake, just do it this way. And it will go all the way over there. There we go. I'm still new. I only started this TradingView account in November, so I'm still kind of learning. Here we go. 15-minute fair value gap. Let's get ready to rumble. All right, so we want to see this continue pushing down, even into 30. Well, you know, if you see the crazy Ivan down here at 5, here we go. If we see this up here, does a little look back and then continue down for that direction there. This little crazy Ivan happening. And if you're asking me where's the crazy Ivan come from, those of you who've been here, poor Lauriston, he has to listen to this shit over and over again. It's like the same stories. And Derek, Derek's kind of lucky he's sick today, so he doesn't have to listen to my stories. Those of you who are sticking around long enough will probably hear the stories a dozen times or so. I tell you, a firefighter loves to tell a good story. I like to tell you a good call story. When Lori and I meet up down in Trinidad, one day we're going to sit by the fire and talk about fire stories. I know it. We're going to be drinking some rum and talking about some fire stories, some firefight stories, for sure. Anyway, what was I saying? Oh yeah, Crazy Ivan comes from the movie. It's The Hunt for Red October. Remember when they're chasing that Russian sub? And the guy says, at the bottom of the hour, he always does a crazy Ivan. They always turn and look back over their shoulder to see if anyone's following him, so they go dead in the water. Anyway, that's what I've kind of dubbed that time at the bottom of the chart, where you start to see that, the bottom of the hour. That's where I get that crazy Ivan from. Sometimes it's very significant. Sometimes it might be a subtle 1 or 2 candles like this, and that's it. And it always occurs, not always, but most of the time it occurs between 32 and 38. Ooh, look at all the color we're getting over here. We're getting lots of people popping in. You guys must be getting the word out there. Sujit, can you please move the chart right a bit so that we can see the price as well? Oh, you don't have the price on there? Oh, that's right, you don't. Stand by. Let me see if I can move it a little bit for you. Oh, let me see. Let me see. That might be on my chart, on my thing here. Stand by. Display. So just sorry, man. I can't get the. I'm trying to think about how I can move my chart over. That won't go on there. Stand by. How's that? Can you see that now? That should pop in there in a second. I think there's a slight delay there. Yeah, there you go. When I have this index thing, or when I go flat and pull it straight over, like when I put a trade on, like when you see it pop like this, when I get rid of that, sometimes it'll you'll lose the time. Now I have to kind of move this over a little bit so you guys can still see it. Oh. Anyway, let's just here's the 38. Look back into here. We've almost got our mean threshold. Bouncing off that 15-minute one. I think AB had mentioned this one earlier. Good for you, AB. Grab 42 handles short on that silver bullet. What silver bullet? I didn't see no dang silver bullet. 10. There's one here, but we never got back into it. Oh, you might have got it down on a 15-second chart. Michael says, oh yeah, look at that. We didn't even think about the 15-second chart. Let's go back to 10 o'clock, see if we can find a silver bullet set up in here. So here's 10. There's 10-10. Nothing there. Sorry, let me make this a little bigger for you. There's a silver bullet here, here. Ah. Again, we haven't taken that low out. You break this breaker here, break below it, come back, find support at it, creates a silver bullet. You could get in right there for a short. So if you, I don't know where you entered in there, Lambo, but if you got in on a 15-second one, usually it's the first one that appears. But if you got in on that, for your rationale was there's the breaker. We get below it. Now I'm waiting for the silver bullet to form below that level. If I want to take out these lows, either we retrace back into it. But if we get this one, order block, I don't know if that would be a rule you would use, but that's the only one I can see right there for a silver bullet short. Unless you went 10.05, you went in here, your stop loss is up there, that would be a silver bullet entry at 10.05. Sorry, that's the one right there on the 15-second chart. Didn't even see it, didn't even get down here. But if that was the 10.05, again, inside of consolidation, I wouldn't have taken it. But if you've took it from there, dude, you are in the money. That was a beautiful run. But you can see the logic. I can see the logic of that there. If you just blindly took a silver bullet at 10 o'clock, put your stop loss up there, really small, short stop loss, you would have been squeaking. You would have had a pucker factor of about 8, and then you would have been laughing. So good for you there, Lambo. Good eye, man. We're getting a reaction off that. I like that. We got to get through here. But we want to see a break in market structure isn't until we get up here. So I want to see something significant. Use this as leverage now. If you're all long, we want to find your narrative long. You don't marry your long trade, but there is a, again, we're still continuing down. We have to assume that this is still going down until we get a narrative that supports an upward trend. So if we blow through this mean threshold of the daily fair value gap, or sorry, consequent encroachment of the daily fair value gap, then you got to start thinking, are we going to reach for the whole daily fair value gap? We're going to fill that whole thing in on the downside. So this was the objective for me today, to looking for the mean threshold. Still haven't quite hit it yet, but that's where I was mentioning it coming down to the potential for it to get down that low. But we Where do you go from here now? Where do you go from here? Now, Michael, I'm sure, would have seen that fair value cap at the 10 o'clock, and he would have been all over that. Perfect, thanks. I need to learn this ICT more. Yes, you need to learn ICT more. That is the only thing you need to learn. And do not go buy it from anybody else, Algo. Don't buy it from anyone. Just go get the live stuff right from the horse's mouth. Then go to ictindex.oi, I think it is. That is the tool you'll use anytime somebody says ICT stuff to you and you're not sure if that's exactly what he said. You go to that AI and it will find out word for word what he said. It will find you the video that he said it on, and it will give you, and it will move you. If you will click the answer, it'll give you the verbal context in which he said it. It will give you the video context. You click on it and it will send you to the video where he actually describes the very thing you're talking about, and you get it germane. That's why I love that algo, because it literally supports word for word what Michael says, and you don't have other people giving you their interpretation and bullshit. You go straight to the horse's mouth and you get it there. It keeps everything germane. That's what I used this morning when I forgot about this whole vacuum order block and vacuum fair value gaps. And what playlist do I recommend? Everything. Start from his first 2016. He says start with mentor 2022 mentorship. I always look at it as do what I did. Go back to the beginning, especially if you're new, and learn it all. Do not try to blast through it all in 6 months. If you really want to get good at this stuff, you study every video you make. I've got binders of notes. I'll take a screen capture of a page, and then I will annotate it, and I will put notes in here. I'll take 20 minutes just to do one page of notes of all things that he's talked about. And sometimes I will type in word for word what he's saying so that I don't misinterpret it. And I've got binders full of printed notes of his stuff. And you need to go through that piece by piece. If you try to rush through this and you want to get it all done in 6 weeks and you want to be a master trader and before summer, forget it. You're wasting your time. You're lying to yourself. You really, really got to spend the time. Back to my Bruce Lee comment. Bruce Lee says, I'd rather fight a man who's learned 10,000 techniques than a man who's learned one technique 10,000 times. That's the dedication. You dedicate yourself. That's why we're sitting in here, 1 minute chart, and we're looking at every single chart. You know how many people are not looking at this and studying? They're just looking at price action and they're not studying it. What's it doing? Where's it going? What candle I want it to bounce off of? What PD array? They're not doing that. And your skills will improve. Trust me, they will improve exponentially if you watch every candle and you think, where's it going to go? In my higher time frame objective, where is my narrative going to support that? That's just my belief anyway. Not trading, just looking for my weekly expectations. Sorry I had to leave for a minute. Almost got my 2080. Oh my effing God, this is good. I can take notes from this. Yeah. Screen capture stuff. Market Maker Primer course. This is where I started. Yeah, I did all of his stuff. It's not even online anymore. I have all the videos. You got to take that. And no, I'm not going to share them with you. If he's taking them offline, then I will not share them. He's taking them offline for a reason. But I did all of his Market Maker, his Sniper series, and what every new trader needs to know series. Everything that he's put out there, I've stuck my head in and made notes on. And I'm a slow learner. It takes me a long time to pick stuff up. So you guys, you young cats and your 20-year-old brains will absorb this information way faster than I ever did. May sound as a joke. Anyone interested in a group studying? Well, that's what the whole Telegram account's for. Pop on Telegram there. You'll find guys that are like thinkers, that we're all thinking of the same thing. We're sharing stuff in there. I will not share anything that Michael has not already made public. Like he's only got the first 4 or 5 models. I will not share anything more than Model 5 ideas. Whatever he keeps germane to himself is exactly what I'm going to keep. Going to respect that. But you're welcome to go to that channel and explore, have fun, practice stuff. Go in. We can even do things. Say, all right, let's look for a Model 1. Everybody study Model 1, and then tomorrow we'll come in and we'll look for a Model 1 setup. We could do that as well if you want. Model 2. Or say, hey, look, let's do this order block thing, and just kind of work through it. We're working on a minute by minute candle here. We got plenty of time to talk stuff through, and you can all learn. And those of you who've got experience, if you want to share it in the sidelines here. That's what my whole purpose of this community is for, is to build like-minded people who want to share and help other people grow. I'm all about let's teach you to fish, man. Let's all get our fishing rods out. If we know how to fish, let's get our fancy rods out and our new tackle. Let's go sit on the beach, drink some beers, and fish together, chat, enjoy it. It's not like everybody has to hoard. You got to hoard your money. You got to hoard your secrets. I see people on here going, "I'm giving this stuff away for free. I shouldn't be giving it away for free." Why? Michael's giving it away for free now. Yeah, he made his money on it, but whatever. That was his stuff. It's free. If you learn something along the way and I can help you get there, nothing makes me happier. I get all tickled pink. I'm all chuffed that I helped you move forward. But again, it's your decisions on any trades you take, not mine. I'm not going to blow your account for you. I'm not going to grow your account for you. That's entirely up to you. Okay, I understand. Let me sound like a joke. MM12.6. What's market maker 12.6? So rare. Yeah, I've got all of his stuff. He had a little private channel where he had all his videos on there. Sniper series. There's a whole bunch of good ones on there. But not 20. 38 years old. Your Southie is 38. Oh, you're an old fart, just like me. No, I'm 58 though. I got 20 more years on you, my friend. You take you 20-year-olds and 38-year-olds, and now you're my age. I think AB's in here. He's retired just like me. I'm a slow runner as well. Joined your Telegram today. Good stuff. Where's the link? It's in the description above. Just go to the top there. You'll see it in the link above. So you see how we're kind of just bouncing around off near that midpoint? That consequent encroachment of the daily. So if that's our downward our objective now, I want to start to see some pop down. This is getting too even now. One more time, drive down into that fair value gap. And then you want to see a nice big indication that it's changing directions. Break in market structure. The elephant sticking their toe in the water, gathering up enough orders down here to turn around and drive price up. If you're looking for that higher weekly objective. Again, we're non-farm payroll, so excuse me. You don't wouldn't pile in on this. I still like this back up here at 469. Even this one here at 409. That old low. If we get a bounce off of this and we start getting a wick back, tomorrow drive up into here, we get a Thursday reversal candle. Remember, Thursday's usually the reversal of the week. So those of you who wanted to go long, see how this Tuesday, Wednesday candles are running all the way down. Then Thursday reversal sets a low. Oh, let me just check my magic calendar here. I've got things set up on my calendar months in advance. Friday. Okay. Yeah, we'll see how today ends up. If Thursday ends up bouncing down and then heading back up for a bold candle reversal tomorrow. So you guys might get your long tomorrow. Might just waffle back and forth here for a while. And then we get one more run down Thursday. Maybe in the Asian session. And then a continuous run up for the rest of the day. How's that for who knows what the hell they're talking about narrative? $28. Mr. T is 28. Man, what a life you have ahead of you, my friend. You imagine doing this for 30 more years till you get to my age. You'll be making your own YouTube channel. You'll be like a guru of the trading world if you kept sticking to this for 30 years. Think about Michael, what he did in 30 years, and he's given you all his trade secrets, and you're starting at 28 years old with what he knows. After all those years, that's what one of his dreams is, to have people get better than him. He'd love to see somebody do better than him. So whatever he sets in Robbins this year, that's what you guys should all aspire to, is to take that trophy from his hands before he dies. You say, Michael, I'm coming for your trophy. Like he did with Larry Williams. I'm so old. Call me Gramps. There's a big void in the regular trading hours on 15 minutes that it might want to reach into for today, for future, or the future. Are you expecting an up movement from 75 to 80 range? $75 to $80 range? What are you talking about, Saudi? Oh, up here you mean. 75 to 80? I'm not expecting anything right now. Right now I'm just still bearish. I'm not going bullish at all yet. I know we all want to go bullish, but I'm not bullish. I'm still bearish. And this is just flat right now, compressing. So it's waiting for some information. Now, we may just waffle around inside here, taking out little highs and lows until that news release at 2 o'clock. Or, yeah, I have no idea. No idea. Can't give you an honest answer on why. I don't want to bullshit you, so I'm still bearish for now. I like this because I said it earlier. So naturally I want to marry another couple of minutes to that, just so I can say, yep, we hit the objective I was looking at. But I want to see I like to see it react off of here, this 15-minute fair value gap, and then use it as either support or resistance. So right now we've just come down and tagged it. I want to see it go through it, come back to it, find support on it, and then start using inversion gaps along the way as stepping stones. So this could be the floor. This could be the building up of the original consolidation as we start moving into a market maker buy profile. That's where I'm looking right now. Not that that's what's forming, but right now I'm looking at that going, oh, that could be the start of a original consolidation. Run down, take it out, pop back up, find some support, off we go. Start a market maker buy profile. And I'm sure you guys are thinking the same thing. At AB, for new learners like us, can you please explain your last statement a bit? 17,275, 17,280. If you're using TradingView, go to the 15-minute chart and switch to the regular trading hours, and you'll see a big void. Okay, so you'll see here, if I go up into a 15-minute, you'll see it pop up. Because I have it on. You go over here to for TradingView, and you go here to indicators, and you go to one ICT sessions, one setup for life. Click that, apply that, and you'll get to see there's your regular trading hour gap. It puts it on your chart for you. It puts on the Asian range, London range, and it's automatically on there. And this gives you your AM session. It just builds your AM session, then your lunch session, and so on and so forth. And you'll see those all set up in here. There's your regular trading hour gap yesterday. Or sorry, this was yesterday's. Then you have your Asia, London. They block them all out for you, so you can use that as a return to. Usually when you break below an Asian session, comes back up, trades back into it in London, so it kind of blocks out London session for you. Anyway, that's how you can. I'm going to bring my carrot down here somewhere. I got to put it in sniffing range of the algo, otherwise it's not going to do anything, right? So there's your regular trading hours gap. So yes, AB, you're right, man. That thing's still sitting wide open there. In other words, the regular trading hours, electronic trading hours, traded all the way through from there, and it gapped to here. So when regular trading hours opened up again, it closed yesterday at that one, and it opened today at this one. But the electronic trading hours traded all the way through here. So this is considered, that whole range there is considered a gap that price ideally can trade back to, trade into, and then if you lose 50% of it, we're looking for higher upside prices. But by then you would have seen a break in structure for sure. So hopefully that makes it a little easier for you guys. And I put it on a 15-minute chart, so when you get down to a 1 minute, you don't. Oh no, I might have changed that to my parameters might have been 1 minute. Maximum time frame 50, it's supposed to be 15 minutes. I've got it on a 1 minute chart now. So, can you see what's starting to happen here? See how we have consolidation? Remember I was talking about the market maker buy profile? We want to see it take off and then start coming back, find some support. That's what I'm looking for right here. So now we've got the 11 o'clock, 11:01. Now, here is a silver bullet for 11 o'clock. If you're going to go long, you go here, stop loss goes below that low, or actually below, I put it right below that thing here. So if we get a return back into this high, this fair value gap here, stop loss will go down here for me, and I want that to stay open. I don't want to lose 50% of the consolidation, so that will be a trade. I'll put the one in, even put a buy order in there. How's that? And then we'll put the stop loss. I'm only doing one little tiny handle there, so 300 bucks. $17,150. Oh yeah, there's more down there. I'm just looking at this going, now is this the bear flag that fails retail? We get a return to this, aiming for, I don't want that guy get taken out just there just yet, because if that's the range I'm in, I'm already in a premium already, so I want to see that one kind of hold off before I let come all the way down, take me in, come back up here. I'll move my stop loss right up right away, just because we're non-farm payroll. I don't want to lose anything on a trade that may not be coming all the way back up here. Like AB says, there's still more stuff here over on the left, but I like this idea of consolidation. Start a market maker buy profile on 11 o'clock. Run back up now for lunchtime. This would be great to see this 11, mind you, this is equal lows here. Yeah, that's the smallest lot I can put on. So the idea is there's the consolidation. We could see a run down because this is all flat here still. We could see a run down through that and then continue up. But all I want is my narrative to come back to here, run up to there, and if it comes back down, then I'll take a couple of bucks out of that. Now, part of the story is if it starts to dig down into here, and I start digging into that candle, I'm out. If it starts to eat into this order block here, I'm definitely out, because I want something to stay open. So I'll get out before that even hits my stop loss. That'll be the idea that I'm trading. So both support and resistance, failure, and so you build your narrative in on your plan. What's your plan? Plan your trade, and then trade your plan. Nothing more, nothing less. So some people say, why don't you move your stop loss right to the place you plan on it going out then? I don't like these other people looking at where my they look for my stop loss down here. And if there's brokers that are messing with your account, they're looking at where your stop loss is. They hold your trades in-house and pair you up with other people. Then I want to see them, they look at that and go, oh, he's too far down for me to reach for. So if I'm right here, and that's the objective they're reaching for, they can open up, spread, take a run on you. And if you don't think they do that, you are new to the market, especially in Forex. So I like to put it down there. My visual is going to be here. So if it comes down, if it comes below that point, it can come down and tag it. But if it starts digging into that order block, those things there, which is the midpoint of that fair value gap, I'm out, because I want to see this provide support now. And really, you don't have any real break in market structure either. You've got just a simple little consolidation with a run up like this. So this is exactly what AB's talking about. Look to the left. There's more down here that could support this trending downward pattern. But I like these bold candles reaching up like that with fair value gaps in them. And if I'm wrong, I'm okay with that. I'm okay with that. Now you'll see that has come down to the edge of that fair value gap right there. See it? Oh, didn't quite tag it. What's the low on that candle? 1150. Low on this candle. 1250. Oh, it actually did. It doesn't look like it's popped down just below that into that fair value gap. That might have been the entry right there of the silver bullet at 11 o'clock. If it takes off now, I'll go, okay. I was looking for more. So I wanted that to stay open. Yeah, it did. It literally tagged it and left. If it takes off, it may not. It may roll over and just keep coming back down again. Now, I don't want to see too much of this. So my thought is, you see this consolidation, there's a little, bull flag there forming. I want to see it come back, hit it, and then start really driving up, if that's what our objective is. If this is going to hold here, right near the mean threshold of the, consequent encroachment of the daily. So now when you see these little highs starting to form here, if you do get a run up, technically you should start peeling a piece off here. So you're going to nibble. There's 10, there's 06 to 2, that's 20 handles from there to there. So see if we can nibble 20 handles out of this. No, you're right. Absolutely right. What I found on the daily is when you're reaching for a high, you dig down into these 1 minutes. Sometimes it sits there and never, it looks like on the daily chart, when you look there and go, oh, I touched the consequent encroachment. Then when you get down to the 1 minute, you find that it was just short of it. Either just short of touching it this way or too short of touching the top of it. But that's okay. I'm close enough to the objective. Ideally, I put the stop loss below that fair value gap. But I want something different up here. If they're going for that, I'll know it soon enough because it'll tip its hat. Like, I want that area to be really sensitive, kick off of that. If it comes back and revisits it multiple times, then I'm out. Because I just want it to tag it and then go. Mean threshold, consequent encroachment of that BISI lines up with the top of the high. Is it an area of sensitivity? Confluence, yes. I want to see it react off of that and go. I don't want to see it start eating through it. Yes, it can get to the body there. Mean threshold would be the low of that. All those are areas of sensitivity, and I want to see how they react off of these little areas of sensitivity here. Knowing that this one here is what we're looking for on the daily. So we're just seeing the same candles. That's the daily one right here. So imagine this is the whole stuff we've been watching for days and days and days on NASDAQ, and it's finally coming down. You want to see it come back and touch the mean threshold, which is this one here on the daily. We're seeing that in the 1 minute. That's what I want to see. Obviously, it doesn't line up with an old fair value or an old high on the daily chart, because that's actually down here somewhere on the daily. So that might be a precision entry right there for silver bullet if this continues longer. And I didn't get it. I wanted more of a discount, so I'm all right with that. And now if it's heading for that objective already, then I'll close out the trade and I'll wait for a different setup. That was your 11 o'clock silver bullet. And from there, at 11 to there at 36 is already 25 handles. And if you don't get your trade, that's okay. It makes sense. It's a precision entry right off there. And what was that on that little mini range there? Let's have a look at the mini range. Not even 50%, I bet. Get up there. Not even 50%. So that just holds strength for the upside. Now, again, you see me draw these. As soon as I see them happening, I start getting excited about them, and I start going, are we building that narrative for the silver bullet, or sorry, the market maker buy profile? Now we're starting to get up into structure. We're starting to see some candy up here, some lovely candy. So price leg up to here, that looks great. So that could be 25, 50, double that, and you'll start getting up into this stuff up here now. Now we've got our market maker buy profile, which we were talking about. Again, it wasn't that these are wrong. We just look for something that says, okay, this could be the start of a market maker buy. What would I need to see to prove that? Well, I need to see those bold candles, which we talked about, and then when I return to, and it's at the top of the hour, so we're expecting a run back into the silver bullet of that hour, and then continue up. Now, I was looking for a deeper discount, obviously. Sorry, I'm going to have a little coughing fit. I'm going to go quiet here. Okay, I'm back. Now you want to see it build support on these little inversions. So now I'm going to get this guy out of here, and I'm going to move him over here now. And here's how you kind of build your, well, you don't have to do it this way, but you know, that's what I like to do, is I like to build these stepping stones. Now we've got a body trading through this. I want to see a stepping stone. I want to see this support here, finish off my price leg, and let me reevaluate what's going on. And wait for a break in structure to the upside. So market maker buy profile, is that one starting? Well, let's get above some highs first before we really overly commit to an idea that we're in a market maker buy. So I fully support the idea that this could have gone down some more, but all the time you see this and say, well, okay, what if this rolls over here and we get this high stays intact and that order block there holds and rolls over and comes back down, then yeah, I'm still bearish. But if I see this turn into a big bold, I was talking about this before it happened, the elephant sticking their toes in the water, they're giving us a displacement. They're saying, hey, look, I think I'm going to take a run for the highs here, or at least for these highs. They dip their toe in the water and go, I see, I was calling for you. I saw you stand on the sidelines in your little sexy elephant bikini, and I see you sitting eyeing up that water. I see you eyeing up the water, and then when you jumped in or you stuck your toe in there, I saw you. This is what we were expecting. We saw you making a move for the pool, and away you go. See what I'm saying? Is once you see your narrative, build it, both sides. And if it's being supported on one side, hold that narrative until disproven. And what do you need to in your narrative to disprove it? And when that disproof happens, then you go, all right, now I've got to build a new narrative in the other direction. Doing this on the 1 minute chart, you're constantly switching all the time. And that's the challenge. You do that on the daily. You come back, you go on vacation, come back and renegotiate your narrative. Right? If it starts to change up. It takes days to change up when you're getting up here. We're on the minute. So you're training right here in price action. We're looking for support off of this now. And I like to imagine these like day candles and ranges that form and say, what's a nice ideal place to get back to that supports further upside. Sorry, I missed some of the conversation going on here. You mind if I'm asking if you can make the next live without delay? Might be something that happened right now, let's say, and you explain it in the time that happened. I have no control over the delay there, Algo Cat. I have no that's just the delay between my feed and yours on YouTube. I have no control over that, and this it could be as much as a 1 minute delay. I have no control over that. We try to get around that by going on the Skype, because I traded live and you can see it cleaner on Skype. So we had it originally started the Breakfast Club up on Skype and traded it on there so people could see it cleanly. But if you're watching your charts and you're catching me a minute later, I apologize. Not much I can do about that. But like I said, I was well in here while I was talking about what was happening here, what I was looking for here. So again, when you see me talking about it here, if you see it starting to happen, even if it's a minute after the fact, kind of keep that in mind. So here we're finding support at the top of the inversion. That's what we want, inversion, and then continue to push higher. Looking for this objective right there. I don't know why I'm making noise. I once saw this woman talking about men and how we like to do sound effects for things. I don't know, you guys are the same way? You guys, men out there, do you have to, when you have a conversation with people, do you do sound effects when you talk to people? This girl says, I don't know what it is, but you men love to do sound effects when you describe something. I was like, do we really? I thought, yeah, I do. Just adds to the drama, I think. So here's the support we're talking about, right? I wanted to see this as a level of support. Okay, didn't get it. Now this a level here is looking good. Now we've got an inversion. We've got an inversion. It's proven itself. So we'll find some support. Now I want to see, you see that slow step up. This step form is what I want to see. And I want to see order blocks hold price. They get managed and then supported. See, there's the open, come back into it. We could come back all the way into the mean threshold of this or back to this low here. But I want to see these, ideally I'd like to see these little order blocks holding price as it starts to climb back up again. I'm sure not to high delay. It seems like we're missing it, but it's okay. 11:13 candle, that's a breaker, right? 11:34 is a breaker. $11.34. Oh, sorry, 10:34. 10:34. Yeah, I guess this 1035 would be the technical 1 minute breaker for that run below that low. Came back. Yeah, came back to it right here. That's where you were looking for support. Yeah. Good eye, man. Excellent eye. Yes. That little tiny candle right there is the breaker. It came all the way back to it, tagged it, didn't see it. Good eye, man. Good for you. Always. Nice. Thank you, man. Yes. I didn't see that there. It came back to that. Also, right to the precision entry on that silver bullet. Beautiful. Yes. Well done. Always. Good. I'm not sure if I do it right, but I think I catch the CAD ICT thing we saw yesterday with Fibonacci. 1 minute, I'm up 0.2%. Don't focus on what you're up, man. Focus on your narrative. Don't get all hung up on prices and how much money you're making and how many pips. Focus on your narrative. Your story has got to be clean in your head. And if it pans out, you should be sitting there quite neutral and flat with your emotions. If you know your stuff, build your narrative. I'm going to preach that now. Build your narrative, what you want, what you're willing to see it go to. Here's that retracement back in. We're saying it could come to here. I want to see that whole price there. See how it reacted off of it? Right off of what we said. Now, I don't want to see it drive through. You want to see that stay open. But if it does get down into it, what's my narrative for we've just ran back up here and we're starting to push all the way back down again. That's why you get out at rejection blocks, you guys. You take a piece off there. If you're in long, rejection blocks, because you may not get the high you're looking for. Look at those are equal highs now. So you want to see this whole price. Now, if we get a wick down, it wicks into this. As long as we want to see where this candle closes now. And you got 15 seconds to see. And if it closes below there, my rule is I'm out. I'm not in it, but that would be my rule. Logical wick down there, I'd allow it to do that. Now you got 2 seconds. Good. Now you don't want to see it come down again. If it touches the edge, now start reacting off of it. There's a fair value gap there. Premium discount. We're really getting into a discount here. Now you want to see this one wick down into this area and then close back up above here. Wicks do the damage. Back to the order block. You don't want to see that get eaten through. Because now that becomes the new inversion here, right? And that one becomes an inversion. That one becomes an inversion. You've already had a body close below that one. And now you've got a body close below this one. Now we're digging into this one. So now you start to go, this could be totally reversing now. So again, watch where this candle ends in the next 8 seconds. Does it rip all the way back up and close back up above that, where the wicks did the damage? Or are we now closing in and below this guy? Yeah, see? Now you've got more downside, so you'd be out. Now, a way to get out is if it trades back up into the top of that, you can offset some losses when it comes back to that candle there and just say, well, now I'm going to get out. So that's what I'm hoping for. It doesn't just turn around and keep coming down. Then you're going to take a further loss. So for me, when I look at this and I go, it opens, if it closes below that low again, I'm out. But I'm going to wait for it to come back up here, cut off some of my losses, and then I'll get out there and take some of my loss. So it's right back to that order block low. That's where you get out there. If you were still long, and now you found out that it broke the body, and started digging into this. We're into this order block that's holding price. That could be your line in the sand. For further upside, look for that order block to get hit in that little range there. There's a premium array there. If we lose the midpoint, you got further upside. This could be the new price leg. If we break that high, look for the next price leg from there to there, from there up. It's good because you can see why my rule for as soon as a body closes below a fair value gap that I have as an inversion, why I get out, and how it can fail if this continues to push up higher, how that can fail. But that's okay. It's not a fail for me. It's just a rule I've adopted. It doesn't have to be your rule. You may say, look, if it breaks that low there, I've moved my stop loss up to this low here. If I lose this stop loss, then I'm fine. Then I'll take my loss. But if it comes down to order block here, makes sense. It's a logical level of support right now, and we're getting back into that inversion. Body came through it. So if you look at a 5 minute, that'll be a wick. What does that look like on a 5 minute? Yeah. So 5 minute fair value gap inversion. So we got it right here. We come down through it, come back up, find some support at it now, and continue pushing up higher. So wick's not a big deal. So premium array, if it rolls over and comes back down again, there's your, I guess that would be the breaker. A logical level to find some resistance at it. I close that fair value gap there now. So we'll see how that reacts off of that guy there. We've come back, close the fair value gap. Equal lows, or this swing low here. There's a little tiny fair value gap in there. Breaker inside a fair value gap to go short. That mean threshold will be the line in the sand if you're going short. See how we talked about this going up? Now how things can be reversing. So now you've got to start switching your narrative to two different versions here now. I have to build a story around continuing to the upside, and I have to build a story around continuing to the downside for support, and when do those stories fail. So have both of those inside your head. You can't be focusing on pips and how much money you're making. You got to focus on what's my story telling me with every single candle. Unless you're just going for money, then you're gambling, because you got no real narrative supporting. You're just hoping it gets to a spot where you can make some cash, and you're looking, as soon as it gets $50, I'm out. And it has nothing to do with charts. It just has to do with money. Do you have a Telegram or something? Yep, Telegram's at the top. You'll see it in the description above. You can click on that and join anytime you want. $650 on one contract. Yeah, top step prop firm. Good for you, man. And on US CAD. Or I'm dumb. Nope. Don't beat yourself up, man. You're not dumb. Say nice things to yourself all the time. You're always put in your journal positive things. I spent a lot of years studying neuro-linguistic programming. What you say to yourself, your self-talk is so crucial. If you say, I'm fat, I'm fat, I'm fat, your unconscious totally believes that. Your unconscious buys into that belief. And you just reinforce it. It gives you more reasons to reinforce why you're fat. And that's what you look for in others. If somebody's negative, somebody's bad, that's all you'll look for in people. So you're not dumb. I don't agree with that you're dumb. I think you're brilliant. I think you have the potential to be an absolutely astronomical trader. You've got to believe that. Accept nothing more. Accept nothing less for yourself than the best. And do it with grace. The best thing you can invest in life is you. Absolutely the best thing you can invest in is yourself. Spend some time and money on you. And gentle. Be gentle with yourself. Support yourself. Believe in yourself. Believe in your loved ones. Always find the good things in people. My wife's amazing at that. Well, she's a teacher and a principal. She just finds joy in other kids, in their learning, in people. She always finds the positive in things. I'm more of the don't trust people, because I literally grew up in a profession that was you see the negative side of the world. I'm out of that now, so I want to see the beautiful things, the positive things, encourage people, let people grow. Anyway, I'm ranting. CAD. What do we see in CAD? Return to order block. If this is a continuation on the downside, look for a return off that order block. That is the key there. If you lose the mean threshold of that and you start digging into the higher and it closes, then you might be reversing, going in a different direction. There's a little fair value gap sitting right in here. You're trading up through it. There's a body through it, so look for continuation to that spot there. Consolidation, same kind of thing. Consolidation, breakout, above a high. You don't get in anywhere here. Break above a high. Trade back into breaker. Draw that breaker out. See how you get support at it? And now you're running for this high here. That's where you take out, scale out something right there, right above those equal highs. But that's a return to breaker right there. So as we saw, this ran up in here, fair value gap. Now we're starting to lose. Now see how it's now traded below that again. We're coming back and finding support at it. So now you've got your market maker sell profile. There's your buy. Smart money reversal, low risk sell, accumulation, distribution. So we're expecting a level of distribution here now. And if we get a second level of distribution, where does our unicorn go now? Right back to where AB was talking earlier, right? So you can't discount your idea, AB, that you've completely written it off now. We really haven't broken market structure to the upside with anything significant. This was just a quick little snipe on some cash on a premium array. So if you're looking at this kind of range right here, that you're just sniping some premium array there. So from here, if you're reaching for that first one, you got in there, you're looking for the first one, looking for that to fill, and then looking for rejection block, and then leave a piece on for the run for the highs. Again, that's just a management rule that you have to develop your own management rule that supports your trading style, and stick to your rules. Stick to your rules. My narrative includes STH at 10:43 as the necessary engineered bait before I looked for a retracement long. I love you. I'm streaming this on a 85-inch screen. It's like trading therapy. Ah, Kirk, you kill me, man. 85-inch screen. That's funny. $17.25. your keys are now. Look all inside these inversions that that have formed in here. And this one here, they're all overlapping right now, so it's just making a mess. And it's a lot for my brain to kind of process minute by minute right now. AB was mentioning about 17,250. 17,250. Yeah, there's, if you go all the way back over here with a 15-minute chart again, AB is talking about 17,250. 17,250. There's an inversion fair value gap right here. That inversion may be a place to go. Also, we have a breaker right here inside an inversion. We have equal highs, relative equal highs here. We have this little swing point here, breaker, breaker, overlap, high, inversion. So this would be, I love the way he's thinking here. AB, good for you. I like the way you're looking at these inversions here with breakers that are overlapping, because that's a breaker, ran below that low. That's a breaker, run below this low. Right? They're kind of overlapping breakers, bullish breakers, and they're right in here off this, they line up with that inversion as well. So if we do get a run below this low, do we get a big wick into here, find our rejection off of that, and continue to the upside? I like that narrative. You know, that's a way to think about it, right? But if you're trading on a 15-minute time frame, stay on the 15-minute time frame and build your narrative around that. Okay? If you start building a 1 minute, you see me trading on a 1 minute, I can't act on a 15-minute when I'm looking at a 1 minute. Does that make sense? Like if you're looking at a 15-minute chart, you're moving away from our minute by minute. You're looking at a minute by minute, as in 15, each candle, 15-minute candle, you're looking to trade that logic, not off of a 1 minute logic. Does that make sense? Otherwise the retracements in here can throw you off and you wonder what's going on for this. So ideally for here, we want to see a retracement back down into this 17,320, find some support at that, and start pushing back up again and start reaching into this order block here on a 15-minute. Again, you'd reach into the body first and the mean threshold. And this right here, look for that candle. It's breaker, runs above this whole high here, runs above that high, breaker. So look for a return to body, what you're talking about. So 15-minute time frame, you're looking for a run down in here. If you don't, though, if it just comes back to the order block here, that's a place that can bounce off of that as well. It may not get back into here. There's a little tiny inversion right there. See that? Draw that out on your 15-minute chart. I love playing around in here. So on that 15-minute chart, again, let's go back to that one. That low right there off of that candle is 320.75. 320.75. So 320.75, 320.75. So right here, that low. Back to that little tiny order block again. So if you find that and it tags that, that's that fair value gap on the 15-minute right there. So if you get a revisit of that order block, taking out that low, if it just swings below that, cleans that out, goes to rejection block, let's say, then, because its mean threshold has not been traded to yet. Let me make it bigger so it feels more sexy to you. There you go. There's your mean threshold. See this one here? This mean threshold's been traded to. Then it left. That order block's been traded to, the open, and the high have been traded to, but the mean threshold, and it would be enough to take them out here, clean out all this lot, come back to the mean threshold there, just pop below that and then start running back up again. So you'll hear me building these narratives over and over and over again and talking through each candle. So this is compression now. See this? Premium, discount, premium, deep discount, premium again of that range, deep discount, inside this range, discount, premium, rejection block, order block. You're running out of PD arrays, so it's going to squeeze, squeeze, squeeze. Now it has to bust out somewhere. And we're getting right before 12 o'clock. So 12 o'clock, drive down. Take out this low at 10:45. So I'm thinking if this order block holds, look for these lows here to be taken out in the next 15 to 20 minutes, 25 minutes. And if it runs, takes those out, and then starts coming back again, I'm all right with that. So look for this guy to hold. And I shall go for a pee. I will be back shortly. I'm hoping one big down candle today, then up candle tomorrow. Yeah, I'm expecting tomorrow to be the reversal we're looking for. Again, don't know for sure, but that's where kind of like what I like on a Thursday. Month of February. Yeah, that would be a nice little, the first wick of the month, and then we have a big upward run for the rest of the month. Or this could be the big downward run in February with the March, April into May run up. I'll be right back. Look at your seasonal tendencies. Lost that. That little order block's holding price. Mean threshold's been broken. Look at this, providing some support now. Now I want to see this break through here again. If we're going up, then you want to see that hold price. I don't want to see it come all the way back through and start mucking about now. You want to see that starting to leave. Again, if you're aiming for a rejection block, the old high, you didn't hit it. See how it pulls back in again? I love rejection block. Is a great way to unload some of your position. I take it on a breakout on the first big candle. I think it's 11:01 on your side. Thanks a lot for the info. Scary, I was going to the bathroom and pause the stream so I can hear what you explained. I'm really hoping one big down candle today, then up tomorrow and start the month of February. Yeah, stick to one time frame. I just have markings on the weekly, daily. Yep, that's the perfect way to do it. AB. Set them up for sure. Weekly, daily, have them overlapping for sure. And so on, just to see how they react. Absolutely. Yeah, as you can see, we got this overlapping 15-minute time frame. We're trading on the one. So that is a definite level of influence for us, right? So yeah, I totally agree with what you're saying. Are you on his Telegram channel? So AB, are you on our Telegram channel? I'm not sure if you are or not. Yeah, don't use it too much though. Yeah, okay. Too many things going on. Hard to keep up. It's like Windows 95, man. Too many options. I remember when Windows 95 first came out. Some of you guys probably weren't even alive then. But when Windows 95 came out, we were all like, wow, it's too many options. There's way too many things to do. Now look at what you got. I want link your Telegram channel, please. Yeah, it's up at the top there. Check out the go to the top of the channel on YouTube and look in the description, the bio description above. I think it's the bio or the description. Anyway, it's above there in that link. That's a permanent link in there. So just go to the bio. You'll find there's multiple different things like the Telegram, the X, and YouTube. No, there's 3 up there anyway that you can jump in on. That's where you can catch me off hours when I'm not trading here. I usually like to look at the Telegram channel, see how people are reacting or interacting in there. Derek's a great resource. Lauriston's a great resource to chat with there. You're all smart people. You all have a good idea of what the markets are doing now that you've studied Michael. And those of you who are new, there's a place to go there and get a flavor of how they think and interact with them. There are lots of people there willing to help you out. Anything under 240, start looking up. LOL. I add you to everything. I add you everywhere. Oh, that's funny. So rejection block, we popped into it. Didn't quite take the highs up, but look at all these equal highs sitting up here now. See that? This is what tells me that that's liquidity they're going to be looking for lunch. That's the kind of stuff we're looking for the reversal Thursday. If we see this just kind of wobble around, remember we were talking about it just kind of wobble around here at the bottom of the day. We may see this wobbling around, and then Thursday, big push down into AB's area back here. I'm going to put that, I'm going to actually add that in there. I like the way he's thinking. I like the way he's thinking. I'm going to put this as an inversion fair value gap here. $15-minute inversion fair value gap. Okay, so let's make this really teeny tiny, and I can move it over really fast, like that. That way I don't have to scroll over. Now I can zoom in. Oops. Okay. So we'll return to the order block up here. Return to it one more time. We've dipped down into that fair value gap, pulling back up. This is the kind of stuff you could see run down into here. So you want to see this kind of stay open. But see, there's no market structure break here on the 15-minute. But this definitely feels like it's got that massive gap there. Definitely it's got a feel for a run on Thursday. Right off of here. This would be a beautiful place for it to sit. Dippy tapping and go. I like this idea that if we hold this whole swing holds, that fair value gap holds on the 15-minute. Again, whatever narrative you're building on the 15-minute or the 5-minute, for example, that'll dig you right into that fair value gap on the other side. There's an inversion right there on the 5-minute. See how the body broke up, came back, hit it right on the money, come back up, mean threshold of that candle, this breaker. We're inside this breaker here on the 5-minute. We've got to get through the mean threshold, a close through the mean threshold of this candle to get more bullish. Right now it's flat. And when you get down to the 1-minute, you can see why it's flat. It's just sitting there doing nothing, side to side. Taking out some liquidity above and below. I think we mentioned that earlier this morning, that if it goes down here, it could be just taking out highs and lows, kind of just going sideways. And this might be it for me. We're going into lunch. I've got an eye appointment today, so we're not getting much action today. Look for the 2 o'clock. Watch for some action around 2 o'clock this afternoon, so that'll be like noon for me. That could be the start. Here's my idea. 2 o'clock, that news release. We get a big downward push. Whether it runs into here, look for these areas anyway. Don't marry anything yet. And the moment we start after 2 o'clock, look for that 210, 213. Remember the numbers? The 216, 17, 18. Look for that time. Unless it's a definite run up and you can catch the 2 o'clock first silver bullet entry. But look for 2 o'clock, 210, 212. 216, 17, 18. Look for those 3 time frames for a clean entry. I'd like to see a big whip down on that news event. Come into here. Either clean this out only and then start booking it for all this stuff up here. And then start heading for that big massive gap we got above us there. That could be the start of tomorrow's reversal. That's my idea. And it's here, indelibly printed for all time on YouTube. We could even see just a run back into this consolidation, 50% of the consolidation. I think we all want it to hit here. Just for some validation, we want to see it hit just take out those lows. But I think this afternoon you'll see something. If we get a big news event stimulator, that could be the trigger for the start of the new run into the hopeful Thursday reversal. And look at that. We just hit 150 subscribers. Woohoo! 150 people. Woohoo! Now there's a party. There's a party right there. I thank you with much gratitude. I thank you. All 150 of you. Every single one of you. Thank you so much. But I think that's going to be it for me for the day. I'm going to go and have a shower and get my freak on for the day. And I will see you guys here tomorrow. Keep an eye again on the 2 o'clock run. We might be just going sideways for during lunch hour now, waiting for that news release to come out. You may not see anything significant on the 1 minute until that news release is given at 2 o'clock. So until tomorrow, my friends, thank you, thank you, thank you. I love you all. I love your input, comments, much appreciated, and I value you all, everyone. I will see you either on Telegram later, or I will see you back here tomorrow morning, 7 o'clock my time in Canada, which is 9 o'clock New York time. And all the best to you all. Be kind to each other. Algo, be nice to yourself. You're not dumb. You're a good guy. Remember that. All think positive, man. We're gonna kill it. We're gonna destroy it this year. We're all gonna learn together. We're all gonna move together. Some of us may move faster than others. That's okay. But let's all get successful together. All the best to you guys. Love you all. See you tomorrow.